the hills, searching for the thrill of it. All alone, we are calling out now to get. Never looking down, I'm just in awe of what's in front of me. It's a grand to people, come on. To people, come on.
Woo! We are back. True North, episode 28, striding towards BTC fixed income. Here we go. We are back. We've got the crew here. We've got myself, Mason, Dan Hillary, and Soleil, the man, the myth, the legend, Soleil. I think Ben may join us a little bit later today. So episode 28, the agenda for today, we have MSTR update and leverage tracking. Going to dive in, deep dive. We're just going to get right into it. We're going to talk about STRD, STRF, STRK, MSTR, the capital stack, the creation of the capital stack, how it all fits together, the bits and bobs and the pieces. We'll look at some comps, some other things that sit in the market, and just try to really wrap our heads around what is really happening right here, and the quadruple threat ATM and how that fits into where MSTR may go into the future. Then we're going to talk a little bit about the Bitcoin conference. We'll chat through that. We'll keep it to a maximum 15 minutes, and we'll get through that pretty quickly. Then we'll talk about the BTC Treasury Revolution, get into merger arb a little bit and some of these structures, because I know this is something that is a hot topic. Everybody's really interested in these days. There's a lot of speculation going on throughout the market. We'll get into that. And then we'll talk about, if we have any extra time, we'll get into Moat. We'll talk about cycle theory. We'll play around with it. Talk about S&P 500, BTC lending products. Get into equity versus debt. We'll talk about maybe Tesla and Elon and all the crazy stuff that's going on there. And we'll see how we go. So, without further ado, I forgot to put the video in of Tim Kotzman. While this may be very interesting and exciting and very fun information, none of this is financial advice. And we are here to talk about what's going on in the Bitcoin treasury landscape. We are here to, give our opinions and thoughts about, what is happening in the market and put some education out there to the community, because we're following this trade. We're following all of these trades. We're following what's going on in the Bitcoin equity space, and want to stay at the cutting edge of what's going on here. So, with that, maybe I'll jump into the leverage update, and I've got that up on my screen here. We will share a screen, and we've got chat cooking. Where is Ben? NSTY is upside protection. Bingo. We've got the chat cooking, and let's get into this. Okay. So leverage update. Every week we talk about this. We talk about the leverage of the MSTR balance sheet, where it fits in, how the capital stack looks, the health of the capital stack, how it's evolved over time, and how things are changing and moving. So these two columns here, AQ and AR, you can see as of 6/4/2025, MSTR holds 580,955 Bitcoin. The current price is around $105,000. So they've got $61 billion in assets held on balance sheet. Got about $8.2 billion in debt, $1.9 billion in preferred equity that's out issued to the market. So net capital on balance sheet of about $50.8 billion. $50.8 billion. This would be around the 200th largest publicly traded company just on a net capital basis. If you're just to compare that net capital to the market cap of the largest US companies, that is a very powerful, strong balance sheet with $50 billion in net capital. Liability asset ratio, 13.5%, and debt coverage multiple of 7.4 times. And you'll see this is really the Bitcoin rating, the BTC rating, an over collateralized balance sheet. You've got so much capital, so many assets on balance sheet relative to the debt held on balance sheet. So the Bitcoin price, in order for the assets to be worth less than the liabilities, the Bitcoin price would have to be somewhere around $14,000 or less, and it'd have to stay there for an extended period of time. Now, on a pro forma basis, column AR, this is outlining the debt net of the convertible bond debt that's currently trading in the money like equity. So there's about $3 billion of convertible debt that is trading as equity, and it can be closed at some point in time in the future. which would be, we estimate this is probably completely hedged out. So if you look at the balance sheet and the health of the balance sheet there, somewhere around 8.2% leverage ratio or 12.2 times debt coverage multiple. So incredibly healthy balance sheet. There's a reason we're showing this, over time. If you look at the last couple of years, at the beginning of January 2024, they had $5.7 billion of net capital held on the balance sheet. If you look at the beginning of 2025, they had $34 billion of net capital held on the balance sheet. So significant healthy growth here into the future. Anybody else have anything to add there?
Yeah, would you say that they have the ability to take on a lot more leverage?
This looks under levered to me, and I think that's the reason they're coming out with all of these products. Is they're looking to tap these different capital pools to inject leverage onto the balance sheet.
Yeah, that's my exact thought. And people are constantly asking me, like, where's the implied vol? Why is the implied vol so low? And to me, this just looks like the very definition of a coiled spring. Like, they have the ability to add leverage, and now they're adding tools so that they can just add leverage anytime they want. They don't have to wait for the perfect convertible bond market. If those opportunities arise, they can slam into them as well. But they can just add leverage anytime they want, and it just seems like the spring is ready to just spring.
I absolutely, completely agree. And let's dive into this a little bit further. So CJ at Strategy put together this post here. This is 365 million raised cumulatively through Strike and Strife ATMs. So as of this week, in the last week, $75 million of capital was raised in the last week on the two preferred instruments. 0 MSTR ATM was used over the last week. And you could see the split between Strike and Strife ATMs is around 50-50. So now we've got multiple instruments that can be used ATM to tap these different capital pools, depending on the demand that's coming into the market on any one of these individual instruments. And so this is just showing how it's changed and expanded over time, which I think this is incredibly bullish, right? Looking at just the trajectory of these orange bars and the orange and green bar combined, this is, in the last 3 months, these products are incredibly new to the market. These ATMs are incredibly new to the market. The liquidity is expanding in this marketplace. And as the market begins to digest these and understand what's going on, this capacity to utilize these ATM products is going to increase drastically over time.
Can't wait.
Yeah, I think that's really the holy grail, right? Is everyone's been saying they've been selling their MSTR to buy MSTY because Saylor has been hitting the ATM. And now what we're seeing is Bitcoin yield that is generated without common stock ATM. And that's a really scary thing for shorts. So I think it's pretty exciting, just all around. And then we'll talk about later how that really is a defense mechanism against a short attack and why it generates what Mason calls perpetual Bitcoin yield into the future, regardless of the market condition, regardless of the demand for the common stock.
Absolutely. You want to jump right into it? Well, let's jump into STRD. Dan, you want to lead us off, and we can jump into the presentation afterwards?
Yeah. Can we do maybe Mason's? Can we lead with Mason's questions?
Yeah. Let's talk.
Well, Dan, let's go through.
Okay.
Yeah, because I think that's important context.
Okay, cool. Let's do, I'll share my screen and we can do it. So I did a post today on what Stride is, essentially, and where it's positioned in the capital stack. And this is...
Oh, wait, that's my screen.
No, we can keep that up, Jeff.
Yeah?
Yeah, let's keep that up. It's bigger.
Okay.
So this is the most important photo for Stride, right? You have to understand how we're positioned within this pyramid scheme. So you've got the Bitcoin, which underpins the entire structure. I really like the rectangle. Sometimes they use the rectangle as showing the Bitcoin collateral, and they section off the different priorities in the capital stack. But regardless, the point being is the converts are senior in the capital stack. So in the case of liquidation, they get paid out first. They get the senior claim over the Bitcoin. And below that is STRF, which they've considered the crown jewel of the capital structure. So they're highest in priority. They get the 10% yield. it's originally a 10% yield, but this is their investment grade preferred product. And so the difference between Strife and Stride is that with Strife, if a coupon payment, a quarterly dividend payment is missed, there is a huge list of covenants of governance features which essentially force Strategy to pay that dividend. So the dividend starts compounding against Strategy, and they owe more every quarter to the shareholders. As the dividend payments are missed, if they are missed, then the liquidation preference goes up by 10% a quarter. So the holders of Strife get an increased claim to the Bitcoin assets. And then finally, if 4 quarters in a row of Strife payments are missed, then the Strife holders are able to vote a Strife preferred board member onto the Strategy board to make sure these dividend payments get paid. So they have a lot of protections surrounding that Strife payment. And yeah, go ahead.
Let's back up for a second here. Let's just look at this pyramid as it's outlined, right? The pyramid as it's outlined is the order of the capital stack. This is what's most senior is at the very top, and what's most junior is at the very bottom, right? So you've got the convertible bonds are the most senior. So if there were a liquidation event or a bankruptcy at some point, the convertible bond holders are the ones that get paid out first, basically. And then it works its way down, right? So then you got the STRF holders, then you've got the STRK holders, then you've got the STRD holders, and then you've got MSTR common stock shareholders. In the event of bankruptcies or liquidations at on any of these other companies out in the market, generally, if there's a bankruptcy or liquidation, the stock is generally worthless, and the holders are the ones that get any money at the very end. So you think about this as just a risk pyramid, right? So you've got the least risky is the convertible bonds. The second least risky is the STRF, Stride, and MSTR. So there's risk return trade-offs for each one of these individual instruments. The least risky have less risk and less return. And as you work your way down, you've got higher risk, higher return metrics as you work your way down.
That's a really good way to put it. Yeah.
So I think what you're getting at here, Dan, is investment grade, right? Like, let's talk through this concept of investment grade, where you're thinking of STRF, and I think this presentation outlines it well. And Mason, if you want to pull up your slide at any point, let's go through it here. But it's this concept of collateralization, right? And so STRF, if you look at this slide was really great by Saylor here, right? If you look at assuming $105,000 Bitcoin price, 50% BTC volatility, and actually let's go to a 30% BTC ARR. So if you're a Bitcoin maximalist and you think Bitcoin is going up 30% compound annually into perpetuity, you look down here at STRF, which is the most senior preferred equity instrument. All of the convertible bonds pay out first, and then you look at STRF. STRF would be 6.7 times over collateralized. That means they have 6.7 times the amount of assets that they do on their balance sheet than the preferred stock that is trading within the market. So incredibly over collateralized, meaning it's the likelihood, the probability that the Strife holders don't get paid out their principal is incredibly low. So that gives you some framework, some like risk architecture and some framework of, what is the risk of these instruments? Well, the risk of the instruments is that Bitcoin volatility is really high and the price of Bitcoin falls drastically and they're not able to pay out the liquidation preferences.
That's the risk.
That's the risk. That's the risk. And when you start to compare this to other instruments in the market, there's I would much prefer digital risk than any sort of physical risk that's likely paying, significantly less yield. The risk return trade-off on other instruments is significantly worse. And I think one of the other points that was made on this slide, which I think is fantastic, is that I don't think there's any other instrument in the entire high yield market that is like even three times over collateralized. I think it was on one of these slides here. I don't know exactly where it's at. Yeah, effectively, there's just a
high yield slide in that.
What's that?
I think you're right. They had like a high yield slide.
Yeah. So when you look at the probabilities here, right? If you've got something that's 5x or 6x over collateralized, and you've got Bitcoin volatility up here on the x-axis, and you can look at the probability that being under collateralized during a single 1 year horizon, it's incredibly small. So I think the strategy team, as they've referenced here, are on this crusade talking to the rating agencies to give some guidance on how to begin to rate these things, how to think about a Bitcoin-backed fixed income instrument. What is the risk? How does it compare to other things in the market? How do you start to frame and understand the risk profile of these different instruments?
Right. And if you're a fixed income investor, you're looking at, as I understand it, you're looking at both exactly what Jeff's saying, the creditworthiness of the security, how over collateralized is my principal, and then how likely am I to continue getting this dividend? And that's kind of where the difference between Strife and Strike comes into play. But that's effectively the same thing. Like, to Jeff's point, the over collateralization of the preferred equity is the same as saying, how likely am I to continue receiving this perpetual dividend from this company? It's all the creditworthiness of the security.
Yeah, and there's a good question on the screen right here, and the question is, why would you buy? What's that?
Can we keep that slide up? I love that 2 rectangle slide. Yeah.
Which one? This one?
Yeah, exactly.
Yeah. So why would an investor buy Stride rather than Strife? And I just don't understand the benefit to the Stride investor. Well, there's 2 things that are at play here, right? So they've set out this capital structure in the market. So they got these 3 different instruments, right? You've got STRF, STRK, and STRD. And the difference between STRF and STRD, actually, maybe I think it has it outlined. Maybe let's go to that slide and we'll explain it. Where is it at? The primary difference is this one. Okay. Right. Let's compare the non-convertible prefs. So these do not have a conversion. So they're very similar. STRD and STRF are very similar. They both have a 10% fixed dividend at par. So really it's a $10 fixed dividend, and the price of the instrument can change relative to its risk profile. So what we've seen, I think when STRF launched, it was priced at something, I think it was around $80. I think as of today, it's trading at $107. So if you would have bought the IPO at $80, you would have had, I don't know what that is, maybe a 12% technical yield by buying the IPO. And now the market has responded and said that yield's actually really high. This is not a very risky instrument. So the price of the preferred equity itself has gone up, and the relative yield, that $10 per share yield, has gone down. So that's the market saying that we think that this is a less risky instrument for the market. Okay, both of these convertible prefs are perpetual, non-callable for life. So they do not have an expiration. They do not have a duration. They are in perpetuity. STRF is senior. STRD, so Stride, is junior. So you can see the effective yields there, and then the cumulative dividend. And this is something I think Dan hit on at the very beginning. STRF has a cumulative dividend, meaning if the dividend isn't paid in any one quarter, the dividend accumulates. So the dividend can stack up over time. STRD, if strategy elected to not pay the dividend, like they can elect to not pay the dividend on any one quarter if they didn't have the ability to raise capital, which I think is a low probability based on the existing structure. But those dividends don't add up. And so in any circumstance where the dividends didn't add up or accumulate, the relative price of STRD would probably drop pretty significantly, and the relative rate that they would pay, the high yield rate, would increase as the price would drop, because that would be indicative that this is a more risky instrument. So why somebody would buy this at the current prices, the spread, right? If you're looking at 9.6% and whatever the IPO is on STRD, which is probably maybe 10 to 12%. I personally, if I had the option between the two and I wanted a fixed income investment, I would be buying Strife all day right now, because I don't think the spread between the two is priced appropriately.
Exactly. Either Strife is going to go, either the principal of Strife is going to increase and the yield is going to decrease a lot when Stride's introduced to the market, or the yield on Stride will go up a lot relative to Strife.
Say that one more time, because I think it's an important point.
Either Strife, it's what Jeff said. He used the word credit spread, the credit spread, which is the correct term. But the way I think about it is just something's mispriced here. If Strife and Stride if Stride's introduced to the market with a 10% dividend, whereas Strife is trading with a 10% dividend, based on the different positions in the capital stack and cumulative clause, either Stride should have a much higher yield or Strife should have a much lower yield based on their creditworthiness and their position in the stack.
Right. And one thing that is, I think, helpful to think about here is the size of the ATMs that they have outstanding on these instruments. And because STRK, actually, I think it's outlined here. Yeah, right. So I think this is outlined really well. You've got STRF, which is the crown jewel, right? This is your investment grade fixed income product, Bitcoin backed. What are other fixed income, investment grade products paying in the market? Maybe the risk-free rate plus 100 basis points. Maybe it's 5.5% yield. So if it's 5.5% yield, maybe the price of STRF should be more like 200 or 180 to be reflective of a yield that is investment grade. So thinking that there's likely some potential price appreciation if you do hold Strife at this juncture. Ben's in here dropping knowledge bombs in the threads, and
he's just critiquing us from
of
this
course
laptop.
Of course he is.
Marking up our paper.
The second thing I point out here, so STRF has got a $2.1 billion ATM. So in total, to think about $3 billion of capital should sit in this fixed income product relative to the rest of the products. Now you look at the STRK ATM and the potential size, so about $22 billion of capital to be raised from STRK. That's the plan. So why is that important? Well, if you think they're going to raise about $22 billion of capital from STRK, that actually pushes STRD closer to risk, right? Let's just say as of today, and maybe it's helpful to look at the leverage. As of today, they've got, what is that? $10.1 billion of debt. And if this number goes to, 25, you're now looking at a leverage ratio significantly higher, right? You're looking at like a 41% leverage ratio. So that would mean that STRD is less collateralized. The BTC rating on STRD would be significantly less. And that means it would be higher risk, at which point, more investors would probably be coming in to buy STRD because there would be a higher yield associated with it because it's higher risk. Now, most Bitcoin investors like myself and probably Mason and Dan would look at these instruments at a high yield in a potential bear market. If they've got a relatively high yield, that might be extremely attractive to myself or Mason or somebody else, because you're like, I think the probability of Bitcoin go to zero is basically zero. And this is now a really attractive, like high yield savings account for me that I could hold capital in to weather a storm, because I don't think MSTR is going away, but it's maybe a good instrument to weather market turbulence.
Yeah, I like that. What Dylan LeClaire said, Strife is the crown jewel. It's the investment grade, and STRD Stride is the junk bond. And I think this fundamentally comes back to the point that people have different preferences. People have different risk appetites and different wants and needs. And Saylor is trying to fill that junk bond appetite for people who maybe have a fundamental belief in Bitcoin. And it's really interesting that you say, cash account. I know when Strife first came out, Ben was like, yeah, this is my new cash account. But maybe Stride takes that place now if you're willing to take the risk. And I think right now the market for all of this is very nascent. The market's kind of figuring it out. And I think over time we will see these. The market will kind of chew on it and price these appropriately. So that will be exciting to follow.
Yeah, absolutely. And I think what might be valuable to look at here is the relative seniority relative to the volatility as well. So if you're looking, let's theoretically, right, if we experience a situation where we think MSTR is in a blow off top circumstance, you may be in a position to peel off some capital and park it in STRF if you wanted to have some stability for a period of time to, weather market turbulence, and it would be less volatile. And then maybe at a future period in time when you think the tide's turning a little bit, maybe you throw it into STRD to get a little bit of a higher yield for a shorter period of time. And there's going to be so much trading between all of these instruments. These are going to be the most liquid preferred stocks in history because there are so many things that you can do with them that we can't even conceptualize yet. Honestly, there will be algo trading companies that are going to be designed literally to just trade these and other preferred equity instruments in the market and just arb between, how capital is moving between all these different instruments.
Yeah, there's still a lot of bewilderment in the chat. So I'm going to give you all the ADIQ version. So I was sitting in the airport 2.5 hours early because I was in the Navy and we don't miss movement. And I saw the announcement come through and I read it like 3 times and I was just so confused. And I'm like, it's the same as Strife, but they just might not pay the dividend. I was like, this doesn't make any sense. And I was like, oh, STRD stands for Stratarded. Like, there's just no way. And but then I realized, I was like, wait a minute, it's not supposed to be better than Strife. Okay, that would be like rug pulling the crown jewel. If you you had your crown jewel as Strife, and then it would be like when they did Trump coin and then it came out with Melania. It was like, okay, it's the same shit. Like they just kind of rug pulled themselves. And Mason might hate me for this one, but it reminded me of Tesla. So when Tesla came out, they didn't come out with like the 25K car first. They came out with an expensive vehicle that they could put out there to high net worth individuals. And once they got the production lines going, then they started producing, cheaper cars. And eventually they're going to have cyber cabs. And this just screams that to me. They came out with Strife. It's the crown jewel. And, now that this is rolling and the market is like is building, they can build these other products. And the reason that you would buy Stride is because it's going to be cheaper. Like it's that simple.
That's a great way to say it. It's going to be cheaper.
So you're willing to take the risk of not getting paid one day if some catastrophic event happens. You're going to, pay less for the shares and you're still going to get the 10% discount. Other people are going to be like, no way in hell. Maybe their fund requires that it be the senior super safe asset, and they're going to be willing to pay more for it to be higher up in, in the liquidation stack.
Yeah, absolutely. I know somebody asked, why would somebody buy STRD if it's like nominally not very different? The answer is insurance companies, banks, any pension funds, anybody with liabilities that have a specific duration, or they've got to asset match the liabilities to the assets, right? You may, the way like modern portfolio theory works, there's a risk return curve, and different portfolio constructions of different risk return metrics can give you a more efficient portfolio with a lower risk and higher return. And that's how like 99% of these asset allocators have to operate, and they have mandates that they got to stay within. So I suspect there's going to be a point in time in the future where STRF is rated as investment grade, and maybe STRD is not, and maybe it's double B or even C rated, or whatever it may be, maybe junk bond status. And those asset allocators can only contribute a certain amount of their portfolio to any one of these individual instruments. Additionally, there are funds out there in the market, and now might be a good time to go to this before we jump into your stuff, Dan. There are other funds out in the market that all they do is buy high yield junk bonds. which is totally crazy. Maybe let's jump to it because I think it's funny.
Yeah, let's get
Jeff,
into
I
that,
just want to
Jeff.
jump in here. The total outstanding value of the global corporate high yield bond market is in the order of roughly $2 trillion, right? So that's Bitcoin's market cap right there. So this is just, once again, it's a product tailored to a certain risk appetite, and it's a market that, you know, maybe as retail investors we're not familiar with, but it's very real, and there's a ton of capital there to be tapped.
100%. And let's jump into this. This is so I pulled this fund here is USHY, which is outlined here in the presentation. You can look at this STRD market comparisons. So there's all these preferred equity tickers, and all of these equity tickers, one of these is the iShares, which is the BlackRock. This is the $14 billion one. This is all preferred equity instruments. It's yielding 7%. It's got a 12% volatility, and it's got a 46 basis point fee. Another benefit of all of the MSTR preferred equities is that they have no fees and relatively high yields compared to these other instruments. And I looked at the high yield bonds. So there's this ticker USHY, which is the iShares BlackRock. It's got $23 billion in net assets. And all this ticker does is invest in high yield bonds. So just think junk bonds. And so I pulled the holdings just to get some perspective on what this looked like. And maybe we'll hide this so we can see everything. And here's some of the top holdings in this fund. And I highlighted some because some of the names are familiar. And you could look at like Quikrete Holdings. So think of like the concrete company has 64. This BlackRock fund holds $64 million of Quikrete USD high yield corporate bonds. And this bond in particular is paying 6.38% coupon and has a maturity of 2032, which is just outrageous relative to some of the what STRD and STRF and STRK are paying in the market relative to these other instruments. And the other one that was publicly traded is EchoStar Corp. This is a satellite telecom company. BlackRock in this fund holds $90 million of this fixed income debt, USD high yield debt, with a maturity of 2029. It's got a coupon of 10.75%. Now, I looked more into this company. This company has a $4 billion market cap, and they've got $40 million of debt and $60 million of assets. So their debt coverage multiple is 1.5x. And you look at STRD, right? As announced today, I think it's got a debt coverage multiple of like 6.5x. So BTC rating of 6.5x. So 6 times over collateralized relative to this other comparable debt instrument from a $4 billion company that makes up the largest weight in this high yield corporate bond ETF. So again, you have these funds where their mandate is all they have to do is buy high yield corporate bonds. And this would fit into those potential instruments. And I think they're going to be the highest performing instruments in this entire, group of, high yield corporate bonds. So I think it's just illuminating when you start to look at what else is out there in the market. And you can see like you've got Nissan, these Nissan fixed income instruments are paying 4.34%, 4.81%, which is pretty low, but Japan interest rates are practically zero. So that kind of makes sense. You got DirecTV paying 5.88%, Dish Network paying 11.75%, Quikrete paying 6.38%. And it starts to make all these other instruments look really good.
These are dying companies, right? Like DirecTV, Dish. These are dying companies, and it's just insane that they're even considered.
Yeah, 100%. I think these are like companies within companies now, right? I think like DirecTV is owned by AT&T or something, but they still have to issue debt. Like they got to go raise capital, and this is how they do it, which is just wild. Wild to think that these exist in the market and they're trading and people buy them. Like what? Like what is the risk? What is the risk profile of direct TV fixed income product.
Yeah, looking at all these categories, somebody was asking like how many of these products are they going to come out with? And I hate to bring up Tesla again, but it just reminds me of that because they're gonna come out with one product in every single category, and it's going to be a category killer. They're just going to have the best product in every single category, and they're just going to dominate that market. So the Strike holders want the conversion option. Strife wants to be at the top of the debt structure. Stride is going to be like, okay, yeah. I actually, some Emperor was asking why would anybody buy Stride? He still doesn't get it. I would buy Stride over Strife personally because I have like 0.00001% chance that they just won't pay the dividend. So I'll pay cheaper for it. I'll get the same 10% interest, and I'll pay less. So I'm your, I guess I'm in your demographic, Stride. You're talking to me.
Well, yeah, I mean, you believe in MSTR, you believe in what they're creating, you believe in the Bitcoin
Exactly.
safety. You may be more interested in taking on what probably to you is nominally like zero risk, right? Like,
Yeah.
theoretically to you, you're like, I think the risk difference between Strife and Stride is zero, but that's not what an insurance company thinks. So that's not what like a pension fund or a bank thinks that has to allocate to these different types of instruments, right? They're seeing these as materially different because they're scared of Bitcoin, right? So they think differently. Like the whole market thinks differently. Yeah, it's weird times. Hey Ben, you look pretty bright these days.
Oh, you guys have no idea what type of brightness I can turn on in here now.
It's in the spotlight.
Yeah. I mean, I've got these insane lights, but on these streams, I've got to reset and
Wow.
bring myself back into the darkness again. Because light's intense, man. It's intense when it's on you all day.
Yeah. Well, when you're getting interviewed by CNBC, you kind of need you need more lights, I guess.
Yeah, in my last episode of Between Two Lamps, I had to really light myself up for that one. That was one of my favorite jokes that started circulating about that.
Between two lamps.
Yeah. But anyways, on to the interesting stuff. Yeah, like what they're building out here is really fascinating. And I think it's going to take forever for people to figure this out.
Yeah, totally.
And what they're also not figuring out is that if you own Strife, you're rooting for them to launch as many of these below you as possible. It just keeps over collateralizing your position. Yours just gets stronger and stronger and stronger. Same thing for Strike. You're rooting for Stride because it's bringing in more capital. It's putting in more assets that are over collateralizing your positions there. I mean, what they're doing is fascinating. And I think what we need to add to that spreadsheet that you do, Jeff, is I think every week we should actually track the credit spreads of all of these to see how they're moving. Because earlier today I was looking at the credit spreads on Strife and Strike, and the credit spread on Strike was, significantly lower than it was on Strife. So I think it would be interesting to start keeping an eye on that and see how the market starts to normalize these products and watch as those spreads start to compress over time. I think that's going to be really, really interesting.
Yeah, my first thought was like, why would they do this? Because, Strife is just going to push Stride's price down. And I was like, no, wait a minute, I have it backwards. Stride is going to buoy Strife's price up. And then I started trying to game theory, how high could it go? And I was like, well, if Strife gets to 200 a share, then I think the interest rate is approximately the same as US Treasuries. So I was like, at least that high.
Yeah, I mean, it's just going to keep making it more and more valuable. I was talking to people today who are, wondering, are the prices of these going to get driven down? And, of course, anything can happen in the markets here, but I don't see a lot of reason for these to go back to trading below $100. I think that was kind of an anomaly. And people were watching that and they thought that the fair market value on these was going to be in the, low $90 range. And all of a sudden, like with all those products that you were just highlighting there, Jeff, with all these junk bonds, you're realizing once you actually understand what strategy is and you realize that you've got real-time access to track the collateral position over top of your preferred equity positions that you're buying, this puts you in one of the most secure and monitorable positions you could possibly be in. right? You can monitor these in real time, and you can make adjustments in your portfolio because you've got a highly liquid market here where if you started getting uncomfortable, if all of a sudden you only had a BTC rating on top of these of, 1.7, and you started getting nervous, you can start making changes. Whereas with all these other companies, like you said, who knows what's sitting behind those? You don't know. Once you buy them, I mean, how many people do you know who are buying bonds and then going and tracking the positions of the companies and figuring out where they're at in the capital structure? And, like it's just not happening. But with these strategy offerings, you can do exactly that. And that's going to be huge because there's going to really be no reason to sit in any of those underperforming junk bonds when you can come over to these and buy these preferred equities that are much higher quality, where you can track in real time how much over collateralization you have against your positions, and you can collect higher yields. Why wouldn't you do that? And for things like Strife, it's the easiest one right now because, when you think about that, everything that gets launched here is probably going to be underneath Strife. That collateral position's only going to continue to grow. And so now you've got this good yield. I mean, the yield's still what, 9.5, something like that.
9.4. Yeah.
And so you've still got this really good yield on this massively over collateralized position. And even if they do suspend the dividends, those dividends get applied to your liquidation preference. So now your liquidation preference just starts growing. So in the event that something happened to strategy, your claim is significantly higher because all those dividends keep getting added on top of it, where they don't with STRD. It's so if you're sitting and you're just a retail investor that's holding any of these junk bonds because you wanted the high coupon payments, you have almost no reason not to come over to these. They're just much better products. And it's going to take a little bit for the market to, actually catch up to this. But when it does, they're going to be able to move a lot of these products through the ATMs. I think there's going to be a lot of demand. And the more they build out this capital structure and they kind of align it to the different tiers that people are familiar with, and that's how they keep describing them, right? Like STRD is kind of their alignment to the junk bond market, and that's kind of their competitive product. That makes it, understandable for a lot of the bond investors out there. But these are going to take off, and you're going to start seeing those spreads come down in a pretty big way over time here. But people are asleep at the wheel. But there's a lot of portfolio rebalancing that's on the way.
I think there's one of two things, right?
Yeah.
Either the entire fixed income market is underpriced, like should be priced higher, or the entire strategy catalog of products is underpriced. And there's going to be a market equilibrium of all these physical risks, crappy, trash, high yield instruments that are going to be rushing for the door to go buy higher quality instruments in significant fashion. I think there's going to be this landslide of capital that, finds equilibrium and comes in the door here. I think there's going to be a ton of demand for these products once the market starts to figure out what these are. If there's a credit rating on any one of these individual products, I mean, we're off to the races. I know somebody asked about credit spreads. There's a couple ways you could calculate it. You may want to look at the credit spreads relative to each other, right? You might want to look at what is the credit spread between STRK, STRF, and STRD. But you could also look at what is the spread between, let's say, the risk-free interest rate, which might be U.S. 10-year Treasury or U.S. 30-year Treasury or the Fed funds rate, and look at that relativity and how that changes over time. Because I think we will see those spreads relative to the risk-free rate come down probably pretty drastically. I do personally think there will be a point in time where STRF will flip the US 30-year Treasury, where the yield on STRF will be less than the US 30-year Treasury, right? You compare the two risk profiles. You look at the US government, which got 800% under collateralized, right? They've got 8 times the amount of debt than they do the assets. And you look at Strategy's balance sheet and STRF, and you're like, this is 6 times over collateralized. The risk profiles are drastically different. So I think it's redefining what is risk in this new digital capital environment, and rethinking like Bitcoin as the hurdle rate. Like what is your hurdle rate for investment? What is your opportunity cost of capital? How do you think of opportunity cost of capital? And the entire market is going to have to start rejiggering how they think about the world with these new financial instruments in the market. I'm all balled up. This is
So
huge, right? This
if
is
it did flip,
absolutely huge.
Everyone,
if it did
I
flip
have seen
treasuries,
everyone's
people
gonna get
ask, you know,
weird.
is strategy letting these products run and letting that price expand in the market? I think that's the beauty of these products. They don't have to, right? Because these are all driven by these yields. And so as long as these yields remained undervalued relative to all the other products out there in the market, the demand's going to keep coming in. It's going to keep driving the price up. And so they're probably using the ATM constantly. Like I'm expecting to see ATM on these pretty much every week, at least on Strike and Strife where they have the ATM right now. And so they're probably selling these into the market, but my hunch is the demand is enough to eat it up. And they just can't drip out enough of it right now because they don't have quite enough liquidity in the market for them to sell it in huge chunks yet, but it's scaling up and they're starting to do that quickly. So I don't think we're far away from, you know, seeing 100 million plus in each product coming out per week. And that'll be, you know, when this all really picks up. And when you look back to that torque measurement, right, these are the products that make a big difference in that Bitcoin yield metric, and they're going to want to hammer that as hard as they can. So, you know, these being self-correcting, self-healing products, right, they use the ATM, you drive the price down, the yield goes up, new buyers come into the market trying to get the high yields, it drives that price right back up. They can go right back to the well with the ATM on these. So these are perfect products to have in the arsenal for any type of market condition. But just imagine these when market conditions are bad, when you don't want to use any of the common stock equity, when the market's not there for converts. You can lean on any one of these, whichever one's going to get you, you know, the highest value for your shareholders in Bitcoin per share. They can go hit that no matter what the market conditions are, because there's always a demand for yield.
And we can
yeah,
talk
when you
about
mentioned rebalance,
yeah, hit it.
yeah, when November happens again, that's my dry powder. Stride is going to be my dry powder. I'm moving right into it. It's a no-brainer. I'm not sitting in cash. Doesn't make any sense.
Silly.
Yeah, that's how I've been using them. Like Strife or Strike have always been that's where my trades end up settling to, right? If I'm sitting on anything that I'm not deploying and I just want to sit, that's where I park it now for a while. And
Absolutely.
it's worked out quite well.
Yeah, and
I think-
these. Go ahead, Mace.
No. Sorry, I just think we should get to defending one MNAV with STRD and well, I think Dan killed it. So, Dan, do you want to talk on that?
Yeah, I mean, I think it kind of stemmed from Josh's idea. Like Josh had been kind of putting a lot of info out there saying that the shorts are attacking the stock, and I know Saylor's aware of what Josh has been saying, and what and just, you know, there's been a lot of short pressure on the equity itself, and so that's very nerve-wracking considering, like, okay, so let's say the shorts really take hold, they start shorting strategy MSTR Class A down to a lower multiple, and then, you know, if they're trading at a 1.3 multiple or 1 MNAV, they can't generate yield in the form of common stock issuance, right? And so that's a really tricky situation. Let's say it's a bear market, everyone's bearish on Bitcoin, strategy's trading at 1 MNAV, say, and they can't generate Bitcoin yield. So it's a really bleak circumstance. They're by no means over leveraged. There's nothing wrong, but it's just their Bitcoin yield will fall. And so what do you do to jack up the Bitcoin yield to get the premium juiced again, right? You need Bitcoin yield to justify the premium. Obviously, the leverage justifies the premium if you're bullish on Bitcoin in the long term, but that Bitcoin yield helps. So what they can do now is they can issue Stride and buy back their shares at a sub 1 MNAV price, which creates Bitcoin yield. It's the inverse of selling shares at a 1.5 MNAV and capturing that spread. If the shares are trading at a discount to the Bitcoin and you sell an asset that represents a claim over the Bitcoin to purchase the shares, to buy back the shares, you're essentially selling Bitcoin at 1 and buying it for 0.7 by buying back the MSTR common equity. So it's a defense mechanism, and it disincentivizes the shorts from taking a hostile short position down below 1 MNAV. But the really key thing, I think, with STRD here is, like, for example, let's say strategy levers up to a 25% leverage ratio of converts, Strike, and Strife relative to their Bitcoin holdings. In this hypothetical scenario, likely Bitcoin would have fallen by 50%. So now the leverage ratio is up closer to 50% of their total equity stack, right? So it would be actually, it would be irresponsible for them to go out and issue Strife to buy back their shares if they're trading at a discount. because it would jeopardize the creditworthiness of Stripe.
Correct.
But when they do this with STRD, they're increasing the creditworthiness of Strife and Strike, while also being able to buy back the shares and keeping that classified as a junk bond. So Stride is the only feasible mechanism with which they can sell preferred equity and buy back their shares at a discount. They couldn't do that in good faith with Strife or Strike, realistically.
And because it's a high
If that makes
yield,
sense.
because it's a high risk, high yield junk bond, the yield would reflect that as well.
Mhm.
Exactly.
So,
Yeah,
so
exactly.
it is reflective of being that higher risk position, right? And if that were to be the case, right? If the MNAV were to fall, there would be more risk associated with STRD than the other products, and so it would demand a higher yield. Yeah, I think you outlined it perfectly.
Yeah, and I think it satisfies one of my remaining like legit bear cases, because we were talking at dinner, and it was just beer for dinner, but we'll just call it dinner. And you know, people were saying, "What's your legit bear case? Like, what would get you to sell strategy?" And one of the only things that I could really come up with is, in a bear market, if they were trading below 1x MNAV and they don't buy the stock back, because that would increase your Bitcoin per share, right?
Yeah.
You're not going to sell into the common ATM to buy more Bitcoin. That wouldn't make any sense below 1x MNAV. And but they've painted themselves into a corner to a certain extent, because you say, you never sell your Bitcoin enough times, like you just can't do it, even though that would make mathematical sense below 1x MNAV. And so my response to the question was, if they don't sell the preferreds into the ATM and buy their stock back with it, I would have to think about moving off the stock, because you have to. I would even consider it like their fiduciary responsibility to do so. And so with this Stride coming out, I was like, they nailed it. Like, that was one of the last remaining bear cases that I could actually steel man. And I was like, you know what, Sailor's bugging the entire casino, because he's just like listening to our conversations, and then like, yeah, I got something for your asses, just you wait. And like a week later, he's like, here, I got something for you.
Yeah, building out the entire yield curve. Okay, so we've been steel manning this thing. Can we talk about the bull scenario, which is cool too? Like, we've hit on all these bear scenarios. What if interest rates drop? Right? If interest rates drop, all of the prices of these instruments rise. All of them. And so that means that the amount of capital that they raise is going to be that much more accretive. They're going to be able to raise that much more Bitcoin with less leverage, less dilution on the stock, which is incredibly powerful. You've got the quadruple threat ATM. You've got all of these products that could all be, operating simultaneously, generating capital from all of these different pools when there's surges of demand in any circumstance, right? If we see another surge of demand from potential S&P 500 inclusion, MSTR ATM, if you see interest rates drop and maybe the STRF gets an investment grade rating, boom, you've got an instant ATM, you're able to tap it and get that capital. It's going to be coming in the door.
Is that an instant reprice if they get a high rating on the preferreds? Like, do they just immediately become more valuable?
I think so. Yeah. If they get an investment grade rating, I think that would be a slingshot reprice in the stock. I mean, it would instantly drop to like a 6% yield. And what is it today? Like 9.6. So yeah, I mean, it might go to 180, like 200. I would think, right? The market would have to reprice it if it goes to investment grade. I mean, anybody and their mother that has an investment grade fixed income portfolio would be buying the hell out of it.
Yeah, the most bullish thing for me about this is like just the threat of Stride being used, or being able to be used, to buy back the stock. That's like a shot across the bow to all the shorts. Like, I double dog dare you, because just the threat of it. Like, you'd only have to do it once, I think, because you're just going to pump the stock price back up, and there's no way that the shorts would be able to cover at that point. And then you've just got that threat forever.
Yeah, the forever threat.
If you can ever get it down to that low again, guess what we're going to do? and it's just like they got the guns
Yeah.
ready.
And the reason
Yeah, so we saw
the reason this works is because you have an instrument, you have Bitcoin, which is a fixed supply, and you're shoving all of that capital that you're getting in the door, you're shoving that into the network with a fixed supply, and you know that the supply curve of that is decreasing at an increasing rate over time. So that's what makes this concept possible, is because you can't make any more Bitcoin, right? The network is going to get stronger and stronger. It's not like you couldn't do this with gold, right? Because gold supply is technically infinite, right? Like you could find gold on different asteroids or different planets, or somebody can make it chemically, or whatever that may be. The supply is increasing over time. Mason, you want to walk through this spreadsheet?
Yeah. So
Can I
Dan and
throw
I-
one more thing out there on these?
Yeah,
before
go
we
ahead, Ben.
Move on to something else. I mean, there's one piece that doesn't get compared enough to like bond coupons, which is that these preferreds are qualified dividends.
Ooh, big.
And that's
big,
really
big.
massive because, for a qualified dividend to get the qualified rate, you typically have to hold it for like a 60-day period within a 121-day window around the ex-dividend date. But when you do, you get taxed at a lower rate, whereas your bond coupon payments will come in at your ordinary income tax rate. So there's also a tax advantage to holding these versus the bonds. So I think that one's really important as people start to figure this out. The other thing is I just went and started modeling Strife to figure out what the price of Strife would need to be for it to be in the range of a AA rating, right? Which the credit
Yep.
spread on that would be like 60 to 85 basis points. And it would be trading at $180 a share
Yeah, that sounds about
to
right.
be AA rating. So you can see, how far we are from where fair market probably is on these. So while people are watching these drift up from 100 and 107 and thinking that that's as far as they can go, once people realize the credit quality of these, they can go much, much higher. So you might not even be buying these for capital appreciation, and it might just happen anyways. So, it's kind of a fascinating phenomenon because we're in this weird spot where people don't understand the collateral that's backing these and don't understand, all the different qualities that these products hold that are superior to their bond portfolios. But man, when they do, and you wake up and Strife is, $150 to $175 a share, and all of a sudden you got massive capital appreciation on something you bought for a 9.5% yield one day, it's a pretty good surprise.
And if interest rates drop, it goes even higher, right? If interest rates go to zero, it goes to 250.
And
right?
rates are going to come down over time, right? I mean, that's going to be unavoidable, particularly given everything you're seeing happening out there in the macro environment. Like they're going to come down. And when they do, those cash flows get more valuable. And so that's going to push the prices up as well. So
Okay.
it's just a really interesting setup, and people are incredibly sleeping on these products. I've had a lot of people ask me, why would I be holding these when I could hold, several other equities in the space? And I go, well, it's the stable part of my portfolio that I still think has capital appreciation. Plus it throws off really good cash flow. Like, why wouldn't I hold some of these, right? I mean, when you've already got your foundational Bitcoin allocation out there, you've got your MSTR that you're going and trying to outperform on, there's no shame in holding these products because these are useful products. I mean, this is changing the way people can structure their portfolios to enhance their lives. And I think that's really important, right? If you look back in time where being a two-income household used to be a very, abnormal thing, right? There used to be all the jokes about it and everyone was rolling in money. And now it's you have to be a two-income household basically just to survive at status quo. So products like these where you can park capital and generate meaningful income, is going to give people a fighting chance if they want to go back to what that old model looked like. And I think that's, a really underrated part of these products. And it's why you see so much demand for all the income products, I think, right now, is we just have this massive societal issue going on that, doesn't seem to have a fix anywhere in the future here. It just seems like it's going to get worse. The money is going to keep getting devalued. They're going to keep spending like crazy. Like, you have to opt out of that at some point. And you've got to find products that are able to augment or at least stabilize your life. And these are those types of products that give you that option with very limited downside to it because you can see the collateral position and they're really, really powerful, right? These are easier to understand than, like a MISTI or an IMSTR for a lot of people. So even if it's just 10%, right, that's huge for a lot of people. So, these are going to be popular.
Got a prediction. Interest rates drop, Strife rises. At some point, the government will have to raise interest rates again in a cycle. And that's when the flippening will happen. Like the price of Strife might just stay high and the yield might just stay there, even if interest rates change. I mean, the next 4 years of watching this stuff is going to be so fun. I mean, these products, the use cases here are going to be fascinating to see how these products are used as collateral, right? Like, we talk about Bitcoin as collateral. These products can be used as collateral, right? I mean, Dan, you've got strike on margin, right?
100%, baby. 100%. I just
I
got my margin rate lowered to match Strike's interest payment today. I called Fidelity, but I needed to match, guys. Make it happen for me, or else I'm
this
going
needs
elsewhere.
to be the same. So you got a free call option, basically. You've got Fidelity on margin, and you got a free call option because you're holding. None of this is financial advice, but you're holding.
But Strife is going to be the blue chip of these products in the market, right? Like I really believe that is going to be the standard bearer for the fixed income market, just because of the scale they're achieving, and that every single action they're taking just makes that one stronger. So eventually you're going to be very hard pressed to go find anything that provides anything remotely close to the characteristics that Strife is providing with the same over collateralization that it has. It's going to be very hard to find in the market. So that's going to become that benchmark over time that all these other products are going to have to compare against. And I mean bonds in that as well, not just other preferred equities that are going to come from other Bitcoin treasury companies, because those are going to come too. And people can structure them in different ways to try to lure in investors. But right now, when you start talking about moats, this product has a massive moat right now.
Huge. And the volume that they could bring in, like the capacity that they could bring in on these instruments is just like enormous relative to, even if the next closest Bitcoin treasury company launched this today, all of these products today, they're only be able to pull in 1/10 of the capacity, and the entire market would be looking at strategy still. They would be looking at strategy in a better light because of its collateralized nature, the scale of the collateral, and how big it is, right? This is the blue chip. MSTR is the investment grade Bitcoin security company.
Pull up my slide, Jeff.
Okay.
That was perfect setup. The perfect setup. I mean,
yeah, here you go. Okay.
Yeah. So Dan and I mean, we sat down, and so the conference, I think we'll talk about the conference a little later. Everyone's talking about different Bitcoin treasury companies, and a lot of them are extremely interesting. Some of them are not. I think everyone should do their own research and come to their own conclusions. But we kind of sat down and we said, all right, what makes a Bitcoin treasury company investment grade? And long story short, strategy, ticks all these boxes, because of course it does. But we boiled it down to three things. And the first one's trust and reputation. Strategy has been doing this since 2020. It prioritizes Bitcoin yield, and it holds, and it never sells, and it's earned market confidence, right? That's number one. And you could say all of these are reinforcing their moat. So I think that's another thing to think about. The second thing, Jeff, you've been pounding on this lately, is the scale of the Bitcoin collateral, right? There's no second best. It's the largest Bitcoin treasury reserve. And because of that, they can issue these fully liquid collateral instruments at a scale and at a pace that other treasury companies haven't been able to achieve quite yet. The third thing is, and this came to me today because of Stride and what Dan was saying about defending the 1 MNAV, perpetual Bitcoin yield, premium agnostic. So even if they go below 1 MNAV, they can sell Stride, buy back the shares, and it's Bitcoin accretive, right? And we had two different options for how they could, or how a Bitcoin treasury company could potentially create perpetual Bitcoin yield, either through their operating business or creating something like Stride or a different unsecuritized credit worthy instrument. So yeah, that's basically what we came to.
This would represent a AAA caliber investment grade. You've got trust and reputation, enormous pile of capital, right? And just a pile of capital that you can't compete with, and then the ability, the instruments to generate perpetual Bitcoin yield depending on any market condition. If things are roaring, awesome. They're generating tons of Bitcoin yield, and they're pumping it into Bitcoin. The price of Bitcoin is going higher, collateral is getting safer. And if the conditions are bad, they still have instruments that they can use, because the market always wants yield. There's always going to be demand for any of these instruments, which would protect the more investment grade or convertible bonds that they hold on their balance sheet. Yeah,
I'm so glad you did this, because I've been racking my brain around, every cycle we have shitcoiners. And when I'm talking to them, I usually say, when someone mentions whatever they're into, and I don't attack their coin directly, I'll usually just say, well, look, if a coin has any of these red flags of a scam coin, then I avoid it. And for me, those red flags are, did they have a pre-mine? Are they centralized? And is it proof of stake? If it's got any of those red flags, I'm like, okay, that's a scam coin. And this is giving me the ammo that I need to discuss what a legit Bitcoin treasury company looks like. If they're not the real deal, if they don't have the trust, if they don't have the scale, and if they don't have the perpetual yield. So it's just the perfect talking points when you're talking to somebody and they want to know what's a legit Bitcoin treasury company.
Apparently we're getting audio problems, but I hear you just fine. So
I hear you guys well.
Yeah, I think we'll just keep cooking.
Great. Someone said MetaPlanet in the comments, and this is a mature investment grade AAA caliber treasury company. That doesn't mean there couldn't be another treasury company that's well on their way to become such a corporation. But this is, once it's mature, like, what are the necessary ingredients, and what should a Bitcoin treasury company strive to generate for themselves? And that other clause, operating business that covers liabilities and sweeps free cash flow into Bitcoin in a meaningful Bitcoin yield manner, that's really important, because I think there's going to be a world in which not every company has to create a full financialized Bitcoin stack of fixed income products like Strategy. You can just be a company making money and having a Bitcoin treasury strategy, but that will satisfy these criterion if you do it effectively with your free cash flows. So there's two ways to do it. Either you have to have this comprehensive structure that's Strategy, or at least strive to have this comprehensive structure like Strategy, or you just have to be very diligent in creating Bitcoin yield from your operating business, and you can't become over leveraged, essentially, like that.
I think different markets provide different opportunities, right? MetaPlanet's based out of Japan. I think they have a moat or they have a regional moat, right? That Strategy may have a hard time attacking, or another company. So I think there's honestly more to this, but I was just trying to come down to like fundamentals, right? Of what should you be looking for, or at least me personally. No, this is investment advice, right? This is what I look for.
Yeah, and I mean, to your point, right? Like you can have technical investment grade over collateralization of a balance sheet, but it just may not be the same scale, right? Like you can have a $4 billion company that offers an investment grade product, but the scale that they're going to be able to do that at is very different than a $100 billion company that's offering these instruments to the market. And as that scale is pretty important. But also, I think another important part here is this operating business perspective, right? Like if you had a company like Nike that's just got massive cash flows coming in the door, and if they decided to adopt a Bitcoin treasury strategy and they're just pumping all of their cash flows into Bitcoin, that's going to be a different type of company than, you know, a company like Strategy that's designed based on you know, its financial strength, and all the products are a function of the financial strength and how that operates within the market. I mean, finance is getting redesigned, right? Like that's the whole the takeaway of this whole thing is like finance is getting redesigned. People have to think differently because the world's moving faster. It's digital. There's digital capital available. Risks in the physical market are probably mispriced. Risks in the digital market are mispriced. There's going to be an equilibrium, redefining how companies work and operate with all of these different forms of ways to store your value. Really good.
Yeah, it
point.
might have been a little harsh. Like you don't have to do all of these. You can just buy Bitcoin and
You just buy Bitcoin.
you're a good company, right? But if you want this AAA investment grade, I don't know, I guess extra Bitcoin premium, you might have to, you know, adopt some of these.
So I think that's a great point because not every company that buys Bitcoin is going to be a Bitcoin treasury company. There's going to be companies who buy Bitcoin and put it on their balance sheet, put it in their treasury, but they're not necessarily running the strategy playbook. I actually don't think, you know, not every company can do what Strategy has done. It just wouldn't make sense. We would quickly go to a hyper Bitcoinized world. So there's going to be companies that are somewhere in between.
Right on.
Somebody, there were a couple of people bringing up proof of reserves, and I know that was a big topic at the Bitcoin conference. And you know, I think a lot of the market misconstrued Saylor's comments as, you know, not showing proof of reserves was a security risk was a Bitcoin security risk, and I think that was just totally misconstrued. And the risk with, you know, having public addresses is not Bitcoin risk; it's human risk, right? It's social engineering risk. The fact that those wallets exist, you can potentially attack or go find who the custodian is. You could go find who manages the custody. You could try to attack or get away into some of the keys. You kidnap somebody, you ransom somebody. All of a sudden, you have issues that you didn't want to have, you know, on your corporate balance sheet. That being said, I know Arkham Funds they've already mapped what they think to be like 95% of MSTR's Bitcoin holdings. There's so many nuances to how this works, right? Like I think they've got thousands of different wallets. The way like some of these insurance programs are designed on these individual wallets, each wallet may only be insured up to $100 million. So if the price of Bitcoin rises and you have more than $100 million in a wallet, there needs to be a rebalancing. So you may be in a situation where you've got you know, a couple hundred wallets that are rebalancing and moving capital so they can stay within the guidelines of what the insurance policy may be. And that could cause a big stir within the market of, you know, oh, Strategy selling all of their Bitcoin because it moved. You know, we've seen this with people talking about the US government, but maybe they just did a rebalance. And there's all of these things that may happen or occur that are just risks of having these out in the market. Do I think it would be ideal if Strategy showed proof of reserves? Absolutely. Like that would be awesome. But also, I don't think that they don't have the Bitcoin. I don't think the price of Bitcoin would be where it's at today if they didn't have the Bitcoin. I don't think Capital Group would have a heavy position in their company if they didn't have the Bitcoin. The big four, like all of their executives and C-suite would go to jail if they lied on their annual audit about how much Bitcoin they had. Like the auditors would go to jail. I don't think anybody wants to go to jail over this whole scenario. And that's like a very serious consequence of, you know, lying on those annual audits. So
it's also acknowledged that this proof of reserves thing is very much a retail investor gripe at the moment. None of the institutional guys are asking for this, right? They know that an audit is effectively proof of reserves, right? That's what that is. And, you know, I personally don't see it as this big issue. I get it that it's, you know, something you can do with Bitcoin and it's very cool, but I don't think it's necessary for a company like Strategy that's in the US, traded on the US stock exchange, big four auditors that are going in, doing audits every single quarter on the largest asset holding that they have. Like, I just, this is going to be noisy in the retail community. It's not going to be noisy anywhere else, right? So the vast majority of their shareholders are not demanding this from them. And I don't think that they're going to make that move. So the other thing that I like is there's been a lot of conversation around whether the market's too saturated with these types of companies. And what makes me laugh is that you go and you look at, like the Bitcoin Treasury's website, and you just pull up every company that has over 1,000 Bitcoin and count how many of them are actively pursuing the Strategy playbook. And it's like 4. So for us to think that this market is saturated at this point is hilarious, because we've hardly started.
Well, there's like a
it just
million
seems like
companies.
Strategy has such a runaway advantage at the moment because of the scale they've achieved. But you got Strategy, you can count 21, even though they're not fully rolling yet, because that SPAC all still has to settle and all the companies have to merge together. So then you got Metaplanet, you've got Semler, keep going down the list. Fold has done a little bit of it, but not a ton. And, that's kind of it. So no, we're not saturated in this market. There's a lot of room for people to come in and run the Saylor playbook. And there's a lot of room for people to customize that playbook and, do it their own way based on what fits their business, which I think is going to be one of the coolest things to watch emerge. But like everyone was saying, you don't even have to run the playbook if you don't want to. Just accumulating Bitcoin through your cash flows is likely to get rewarded by the market as well, because the market's seeing the power of just having a Bitcoin treasury. And when you watch all the news coming out, you see all these massive spending bills coming out, and you see that truly nothing stops this train. You're going to want the companies that have the hard asset balance sheet, right? That's what you're going to want. You're going to want that digital capital war chest, and that's what investors are going to be looking for. So I think the biggest cohort we see over the next 12 to 18 months is just going to be exactly that. Just companies making the move to convert treasuries and converting excess cash flow into Bitcoin. And I think even those companies are going to get rewarded. It's not quite as active as some of these other ones for us high octane junkies out here. That's probably not going to do it for a lot of our investing needs. But, for a lot of people, it's going to be a big stabilizing factor in a lot of these companies that would otherwise see their equity prices start to get ground down over time as that asset value erodes. So I think we got a big wave coming of the more organic style of the Bitcoin treasuries. And my hunch is we still get another 10 to 20 of these strategy style playbooks that come into the market. So I don't think we're anywhere near finished seeing capital flow into this.
And I think the easy answer with what you're talking about, Ben, and how proof of reserves applies to that is just put it in your valuation model. So if you want to compare Strategy's price to another Bitcoin treasury's price, and if you think 400 a share is fair valuation for Strategy, but then there's a 1% chance they don't have the Bitcoin and the price of Strategy crashes to 200, okay, there's a 1% chance of a $200 loss, which is $2. So now your fair valuation model has dropped from 400 to 398 because of proof of reserve risk. So just stick it in the valuation model and then buy whichever company you think is the most valuable.
Well, and some companies are going to do the proof of reserves, right?
Exactly.
And for the people that are cheering for the proof of reserves, then that's the asset for you to invest in, right? I mean, that's the beauty of differentiation in the market, is if you don't like the way that Strategy does it, you've got other options, right? Metaplanet does proof of reserves, go invest in Metaplanet. Like, there's a flavor for everybody. And if that's the level that you need to have to be comfortable making an investment, then you've got choices for that in this space. So, you don't need to pick a fight with all the other companies that are doing it a different way. You just vote with your capital and you move your capital to the one that supports, your belief system. And that's great.
There you go.
I don't have any issue with people doing proof of reserves. I just personally don't think it's necessary. If you've been a part of a Big Four audit, you'd rather have a spinal tap than go through one of those, right? So I just, there's proof of reserves happening every quarter. I'm not concerned about that. But even so, if that's something that's a big sticking point for you, you move on to one of the other companies that's doing that. There's a flavor for everybody out there now.
There you go.
Jeff, do you mind if we get into, I have a little document prepared of preferred non-cumulative equities.
Yeah, can you zoom in?
Yeah. Preferred non-cumulative preferred stocks. So exactly what STRD represents for strategy, and they tend to be from banks and utility companies, financial institutions and utility companies. And the point I'm trying to illustrate here is that it's very unlikely that strategy will defer on any of these payments, and there is like a historical precedent for that. So General Electric offers a 5% fixed. This one's a little weird, but it was a fixed 5% between 2016 and 2021, and then it switched to a 300 basis point spread over the LIBOR, which I don't know what that interest rate is set to. Do you know, Ben or Jeff?
That's LIBOR. Yeah.
LIBOR. Yeah. Okay.
Yeah.
So that's been the interest rate on this preferred non-cumulative equity since 2021. So that's been trading since 2016. Bank of America offers a 7.25% non-cumulative perpetual convertible preferred stock, perpetual convertible. So this is essentially strike, but it's different in the non-cumulative clause. That's been trading. That traded from 2008 to 2017, 17 years, never missed a payment. Same with General Electric, never missed a payment. All of the clauses are both non-cumulative, like Stride. And then finally, Georgia Power, utility company, they have a 6.5% preferred stock, non-cumulative, par value of 100, pretty much exactly the same as STRD. And it was announced in 2007, and it was redeemed in 2017, 10 years, and there was no record of a missed dividend payment. So in all these instances, it's in the company's best interest to continue paying that dividend while the company stands in good credit worthiness.
It's really like a survival feature, right? Like if all hell breaks loose and, for a year, I could not pay the dividend for a year, the price of that instrument is going to get hammered and the yield is going to rocket. The technical yield is going to rocket, but it's a survival feature. It's like, okay, we're going to last another year and figure out what's going on here. So I'm sure it's come into play on some of these instruments that have gone bankrupt at a point in time, but maybe with your research, it didn't show up.
These are just long. I looked at the longest standing ones, so I didn't look at distressed companies. I just looked at companies that were still in good standing. So I think the underlying assumption is if you think MSTR will be in good standing in 5-10 years, you can assume the STRD dividends will be paid out.
Yeah. I think one more thing to hit on is the dividend itself, right? Because you've seen a lot of people running around like, what does the dividend come from? It's mainly just OG Bitcoiners that don't understand what's going on or don't understand capital strength or refinancing or, how this whole thing is working. But they put a great slide on this in the presentation as well, the equity ATM uses. So I really like the statistic that they had here at the bottom, the annual fixed obligations as of today. So their total annual obligation is $235 million, which is laughable based on how much capital they raised, because in the year to date this year, Strategy has raised $9.1 billion year to date, primarily through the MSTR ATM, but through the other instruments as well. So you look at the annual fixed obligations as a percent of the daily traded volume, the daily traded volume being 5.6 billion. So the annual, the fixed obligation for the entire year is 4.2% of what the daily traded volume is. So this is generally not an issue based on how much capital is coming the door and how much stock is being traded day to day. And as a percentage of the equity raised, it's 0.9%, and as a percentage of the traded volume, it's 0.02%. So it's the last 12 months traded volume, 0.02%. So how's the dividend getting paid? It's getting funded by any of the different instruments or the capital raises that they're utilizing, any of the ATM instruments, any of the convertible debt instruments, and the ability to raise capital has been very apparent for MSTR. As these instruments grow, that may be more of a concern at a future point in time. But looking at just the statistics that are available today, it is a fraction of the capital that they've raised in a very short time horizon. Cool. All right, so we shift gears. We want to talk about the Bitcoin conference. I think we've hit these over the head.
Yeah.
Let's talk about the conference. Let me take my screen off. Who wants to go first? Takeaways, thoughts, ideas?
You got to get to one of these things. It was the first one that I had ever been to, and just hanging out and arguing about proof of reserves and op return and store of value versus medium of exchange, and just all of the nerd shit that you want to talk about with people that you just can't, and they're just everywhere. And people that you just, all you've seen is their profile pic on X or whatever, and then they're just across the table from you. It was freaking amazing.
Yeah, there's supposedly 35,000 people there. It went for 3 days. It was pretty electric. I mean, there were tons of people there. The expo was kind of interesting. Walking through the expo territory, I think there were, I don't know, but probably 100 companies there. A bunch of them brand new or doing weird things, mining, lending, a lot of mining, a lot of lending and custody solutions. It were pretty hard, in my opinion, to kind of like pick through them and kind of understand what was going on there. But yeah, it was you definitely felt like a real person. You could talk to anybody, right? And you would be able to speak the same language, which, if I walk to the coffee shop over here and talk to them about, strategies, Bitcoin, or like cut my custody. Oh, I ran into this custody. I'm just trying to figure out my multi-sig, so they'd be like, what the hell are you talking about? And you do feel like a normal person as a Bitcoiner going to these things, right? And maybe that becomes a little bit more normal as these things continue to grow. But yeah, it's pretty.
You got to get DocStack's comment on the screen about us getting kicked out of the bar.
Oh yeah, we did get kicked out of the bar. Oh yeah. Oh my God, we had too many people there. We had a True North. We had a True North meetup, and I think we posted about it for, I don't know, a few hours beforehand, and yeah, we got kicked out. There were too many people that showed up. I think 100 to 150 people showed up at this Yard House bar, and they just didn't like money. They didn't like money apparently, and they were like, "You got to get out of here." People are complaining in the booths, and they didn't have space for us. They told us to sit down, and we're like, "We're not sitting down." Ended up going to an Irish bar a few places down that had like blackjack flipping, and it was a ton of fun. I loved meeting everybody that came through. Thank you to everybody that came through and had a beer with us and chatted and took pictures and stuff. It was just electric running into people. And it was a little bit more, I guess, kind of retail focused than what Strategy World was a few weeks prior. So it was a fantastic, phenomenal time.
Yeah, that was like 100%. Definitely the highlight of the whole conference is meeting other people who are interested in these subjects and who are passionate and engaged, because I feel the same way. And yeah, it's great to connect with people, because again, like sometimes this could be very isolating when in your real life you don't have people to talk to. But my biggest takeaway from the conference generally is Bitcoin treasuries were the talk of the town. At least it felt like that to me. Like it was, in my opinion, by far the largest kind of all-consuming topic within this niche space that is Bitcoin. And it makes sense. I mean, Saylor has made a splash, and Nakamoto sponsored the thing, and there was just a lot of buzz around it. I have to say, Jeff and Ben, your panel with Grain was, I'm biased, but it was like by far the most interesting electric panel of the whole conference. And there's standing room only. They needed a bigger room.
It was like a football field line out the door, apparently.
Yeah. There's a line out the door, but that's on YouTube, right?
Not yet. No. Mm-mm.
Not yet.
No.
Okay. Well, they need to get it up there.
Yeah, we reached out about it today. We'll hopefully get it out there.
Yeah, I didn't realize that they were actually, that they shut the doors and people couldn't get into it. I didn't realize that part of it. That was kind of crazy. But, our panel, because we're, an internet group, we can just have more fun with it, right? I think you go to these conferences and everyone gets up on stage and they try to be really serious and, take themselves super serious while they're discussing this. And then, here's our True North group up there, just like having a blast, happy to be here, right? I mean, it was was a ton of fun. And Richard's an awesome guy. Before we got on stage, I'm back there pitching him like, you're doing cool things, but what would be really cool is if you were in True North. And we're just selling him on trying to get the group. I mean, so we were just having fun. I mean, it was a blast. Even, before we went up there, we were all just chatting, having a great time. So I think people pick up on that. And, because this is such a community focused show, they get to kind of be involved, right? Because it's one of those things where they followed along with us. I mean, this is episode 28, which actually always surprises me that it's that low, because it feels like we've been doing this forever already. But people have gotten to know us. They've gotten to know our personalities already. I mean, we talk enough that this is just who we are in real life too. So conversations come easy with everyone because we're so interested in all the same things. I mean, it's just a blast. I showed up at the happy hour. Jeff had already called it a night, or he was trying to, double up his stack on the craps table or something by that time. But I showed up at 11:15, 11:30, something like that. And there was still
we were there.
People in there still. I mean, so people were still going, man. And it's just so cool when you've got that type of a community built up out there where everyone's just out having a blast. You get these few times a year where people can really get together and get to know each other and talk. And that's what makes these events fun. I think it's as much about the things that happen outside of the event as the event itself. I mean, you just get so much quality interaction in a space that we're all diehards in, but most of the world just shrugs and has no idea what we're talking about. Like when you're in a place with 35,000 people there for the same thing, you're not the weird one anymore.
Mm-hmm.
Yeah.
We're the only normal ones in town. And I say that loosely because I was walking back from the bar and I was following a crowd dressed up like wizards. So, they were the Bitcoin people from one of the parties going on. And I can only imagine what that looks like to everyone else. But to me, it hardly even registered. So I guess that shows where we're at in the cycle.
Here's how your panel that you guys did with Richard Byworth, there was a panel right before that was also about running the MSTR playbook, but in other countries. And they had a guy from India, a guy from France, guy from China. And I'm like, I'm going to go to that and see what they talk about compared to what you guys talk about. But also because I wanted to get a seat, I wanted to get, a good seat. So I'm standing in the back and I'm waiting after that one ended, and I'm waiting for everybody to get up and leave so I could take a seat. And almost nobody got up to leave. And I was like, they all had the same idea. They were just getting there early for your guys' panel. And I was like, holy crap, nobody got up to leave. I was so mad. I had to squeeze in real quick. I saw an empty spot and I snuck in and got a seat.
Yeah, it was wild. People were
crazy.
sitting on the floor. Yeah, it was crisscross.
They were lined up.
It's totally nuts. Yeah. Ben, to your comment, it's so funny. I mean, one of the comments that almost everybody led with was, I feel like I know you, but you don't know me. And it's like almost everybody led with that, which is just so funny. It's like you're meeting all of these people. It's a very, very humbling experience. We just talk about Bitcoin finance. This is the biggest story in all of finance, to be fair. So, I get that there's a lot of attention on it, but it does feel like Bitcoin market is evolving, right? I mean, at the Bitcoin conference, it was very clear that big finance was there, right? Like in the backstage whale area, capital providers everywhere. I ran into people that were in all of the pipe deals for the Bitcoin treasury companies. I ran into CFOs. I ran into, convertible bond arb traders. I ran into CEOs of custody companies. It was very clear that, or like bankers, right? Bankers were there. And it was very clear that this is evolving into a new system that includes the traditional financial market landscape, and all of these people are seeing opportunity in this market, and there's capital coming in the door from that perspective. It's going to get bigger, right? There's thousands, believe it or not, there are thousands of very smart people in the traditional financial world that have not figured out Bitcoin yet. And when they do figure out Bitcoin, they're going to be here, and they're going to be putting their foot on the gas because they're going to have access to capital, and they're going to be doing the same stuff. And this is going to get just so much bigger because success breeds more success, and people will follow success. And we're seeing it now with strategy, right? And I think that's why we're seeing Bitcoin treasury companies pop up. We see a couple of these companies like Nakamoto and ASST, Strive, raising, $700 million in a couple of weeks, which is just crazy. That's just a crazy amount of money to be able to raise in a very small time period, right? If you were like a startup biotech and you wanted to go raise $700 million, it might take you years. And like, that just shows you the scale of the opportunity of people that are trying to dive into this landscape right now. So a lot of opportunity. The landscape is evolving. It's becoming very different than I think it was in the past. A little bit less crypto anarchist and shifting into portfolio managers and bankers and people chasing TradFi opportunities.
I did also appreciate that there were some people that said we shouldn't be there because, we cover MSTR and not Bitcoin.
Yeah.
That made me laugh. I love that we have all sides of the coin.
Yeah.
It's fun.
Yeah, I mean, but this is important, right? This is super important, right? That we're talking about the single largest buyer of Bitcoin in the entire market, and how they're restructuring the capital the capital environment, right? Like we have a yield curve on Bitcoin now, like a capital yield curve on Bitcoin, and you're going to be able to compare that yield curve to other yield curves or the U.S. Treasury yield curve. That's just like totally reframing like how the entire market will operate. And it'll take a while and it'll change, but I mean, this is just going to get so much crazier.
Well, that's the thing with Bitcoin, right? I mean, Bitcoin isn't owned by any one person. It's got released to the world. The world gets to decide how Bitcoin's utilized. So even though you've got a lot of the purists and you got a lot of the OGs that were there at the beginning, like, you can have an idea, but the market dynamics are going to win. And the people with the capital that are transferring and siphoning that capital into Bitcoin are going to ultimately decide what it looks like. I mean, that's what markets do. So you need all conversations that are there, even the ones that, people don't like, whether that's ours or other ones, right? I'm sure there's plenty of conversations that a lot of us, wouldn't have thought needed to happen there, but, so what, right? That's what the ecosystem is. It's broad. Everyone gets to pick their flavor now, figure out how Bitcoin becomes a part of your life. And what's important is that Bitcoin does become a part of your life, right? That's what you need to happen at the end of the day. So everyone makes that journey their own way. But recently, it seems like a massive top of funnel for people getting orange pilled is coming through the equities market. And that's a massive service to Bitcoin, because that's how people are finding, spot Bitcoin holdings and taking them into self-custody and really going down the rabbit hole. So it's a different phase of marketing for Bitcoin. It's not just happening in, Reddit chats and 4chan and, the deep corners of the web anymore. It's mainstream, and people are making a ton of money in the equities market. And then they're going, man, now I got to figure out where to put some of this money. What asset should I be saving this in? And then you go down the Bitcoin rabbit hole. Next thing you know, you're buying hardware wallets from every provider you can find, and you're nerding out in your basement and starting nodes and running miners and doing everything Bitcoin has to offer. So whether people like it or not, Bitcoin treasury companies are here to stay, and they're doing a huge amount of orange pilling in the retail investor community. And I think that's a net positive for this whole space.
I went to the dentist today, and they were talking. They know that I'm like a Bitcoin influencer. And they're like, what's going on with the Bitcoin? And like, I still don't get it. And I was like, just buy STRK. My financial, non-financial advice is just buy STRK. You got upside and downside protection. And it was easy to say that. It's like, okay, here's a ticker, right? Like, go to your brokerage account and like you can access this ticker. And to your point, Ben, I mean, it's just you got to meet the investors where they are, right? Like, fixed income investors aren't going to go buy Bitcoin. Right? Bitcoiners just thought fixed income investors were just going to go buy Bitcoin because it's better. Well, no, it's not going to happen, right? Like, they like literally can't, because they have liabilities coming up on the horizon. They like literally couldn't. But now, I used this analogy a little bit earlier. Like, imagine a fisherman in the middle of the ocean going fishing for halibut, right? Halibut live on the bottom, like the seafloor, right? Trying to get a fixed income investor to buy Bitcoin is like having a fish hook like hanging on the top of the water in the ocean. It's like, yeah, a halibut's never going to come to the top and buy the fish hook. You need to drop the fish hook all the way down to the bottom so you could catch the halibut and bring it all the way back up to the top. And like that's what the fixed income products that MSTR is creating are providing. And it's like you got to meet the investors where they are. You got to create the products that they can consume in the wrapper that they are used to in order to get these people in the door. That's IBIT, that's MSTR, that's all these Bitcoin treasury products. It's STRK, STRD, STRF, right? Like all of these instruments are created to hit and meet the investors where they are. And that's the real unlock of what's happening
It's
in the
like
marketplace.
it's like translating Bitcoin,
Mhm.
right? It's translating Bitcoin into a language, into a risk framework, into that they can understand, that's accessible and that feels comfortable.
Yeah,
It's
I
a
read
language.
I had read the release on STRD 3 times through, and I'm still trying to figure it out. And my wife's like, "Well, you know, why are you so why are you so obsessed with this right now?" You know what I mean? I'm like, "This is our job. Like we have to we have to figure this out. Like if I'm going to explain this to somebody else, I have to understand it." And so I'm still talking to her about it as we're boarding the plane. And as I'm talking about how they're offering this dividend, but they can just not pay the dividend if the board votes in a certain way or whatever, I can visibly see the guy in front of me getting interested. And he starts like turning around, even though we're going this way, he starts turning around to face me. And he's like, "Oh yeah, they do that all the time. All of these dividend, offerings, they put that clause in there just in case." And you know, I was like, "Man, I should really just launch into like my orange pilling moment, at this point." But it was just kind of cool because talking about this type of product, this guy was super interested in, and there's no way in hell he's ever has the slightest idea what Bitcoin is. So
Right.
it was cool. Exactly what you're saying is just attracting, uh, people to the products.
Yeah, the chasm's too big, right? Like you gotta shrink the chasm, make it just easy to jump across, which is just crazy to think about. But I mean, you got to meet the people where they are, and that's what's evolving in the market. Shall we shift gears and talk about BTC treasury companies just a little bit more broadly, because there are a lot hitting the marketplace, and I think a lot of people are asking questions on how to do these things. And we can kind of speak broadly on this kind of merger arb concept. Without going into details on any one of these, because we don't want to get into any legal ramifications, but there's these opportunities where investors have the ability to invest in these Bitcoin treasury companies pre-IPO. So these Bitcoin treasury companies they're getting access to the publicly traded market, and they want access to the publicly traded market, so they have access to these different capital environments, right? They want access to the passively traded index fund ETFs. They want access to the convertible bond market. They want access to an ATM. They want access to create preferred shares, do all of those things. And the best way to do that is as a publicly traded company that's highly liquid, right? If you've got a really highly liquid asset that you're holding on balance sheet, it's great to have it in a publicly traded wrapper, so you can have a highly liquid publicly traded instrument. So a lot of these companies are going out to market and raising capital very quickly to either go like reverse merger or SPAC, special purpose acquisition vehicle, special purpose acquisition corporation. There it is. And they are able to take these private companies and make them public in a short time frame. So that's the reason for a SPAC. That's a reason for a reverse merger. And the capital that's coming in the door via PIPE, this is a private investment in a public equity, is accessing or providing capital to these companies so they can go IPO. And when the companies merge, when there's this private company merges with the public company, all of the shares and all of that capital is now liquid in the market. So you've effectively got two companies. And generally, the company that's already public is like a very small company. It's just a shell of a company that's small in size, small in scale, and you have a lot of capital coming from these private companies. And now you take this really small company and make it a really big company. So what's happening is, some of the small pieces of these companies, it only represents maybe 1 to 5% of what may actually be trading within the market once these deals do close and all of the capital is potentially trading in the market. Pause there. Any guys want to add on to that?
Yeah, I would just say with like these target companies for reverse takeovers, typically what's happening is you see a lot of this in like the medical space where they might have been going through something like clinical trials and then they didn't get through the clinical trials. So now the business is effectively dead. But what's really valuable about that is that it's a publicly traded entity. They have a reporting history with the SEC. They have shelf filings that are available to them. And that's what makes it a really expedited way for a private company to get public and to have access to everything that comes with being a public company. Going through a SPAC process, usually it takes, a little bit longer, probably 7 to 9 months, to get that fully closed and to get into the markets and to start opening up all the products that you need. So that's a little slower. And then an IPO, comes with its own headaches. So a lot of people are going to RTO right now because it's the faster way to get into the market. And because of that, you're seeing a huge amount of activity. And when you're merging into these small companies, they're usually nano caps that people are looking for. So it's, it could be companies with less than a $10 million market cap, but they might be already listed on NYSE or NASDAQ or one of the big exchanges, which is a huge advantage for all of these companies. So when the private company merges into the public company, the private company becomes the surviving entity of that merger. Typically, they'll take over the ticker symbol, they'll take over the corporation, and then, the stock will get split up however they agree to do that merger, right? It might be that the public entity gets 5% and 95% is the private company that merged in. But what you're seeing in the Bitcoin space is you're seeing reverse mergers tied together with pipes, which take a couple of forms. It's usually an equity deal where private investors are buying equity before this merger happens. And so that gets done at a predefined price. And then usually there's like a convertible bond that's also associated with the same transaction. So it's usually like a dual transaction, one part's equity, one part's debt. And a lot of times that convert still, converts after the pipe is done and the public or the company's public. So that's what you're seeing happen a lot. And I just kind of tossed that grenade out there on Twitter the other day and didn't realize how many messages I was going to get about that one. But, there's a market for everything and there's traders around everything. And one of those is merger arbitrage. And what merger arbitrage is at the simplest of levels is investors come in and they invest in the pipe. So they've got shares coming to them and they know how many shares are coming to them. You get these announcements in the market, the stocks skyrocket. And then these guys that have allocations in the pipe will go out and try to find shares to short so that they can lock in that gain and they'll close out that short when their shares are delivered to them. So at the most basic level, you can think of that as merger arbitrage, right? They're taking that difference between the pipe investment and what the market reaction is to these. And what you've seen is those market reactions can be significant, right? 1,500, 2,000%, pretty good gain. The hard part is you can't always find the shares because there's low float on the public entity, right? These aren't big companies with a lot of trading volume. So you can't always get that short leg of the trade through direct short. So you might have to go to things like total return swaps if you can get them, right? Let someone else go try to source the shares on your behalf. You might be able to do it through forward sale agreements on the shares you've got locked up in the pipe. You might be able to do it with derivatives. You might be able to do it with basket hedges. I mean, there's all kinds of ways that these guys will use to try to get that short leg exposure on this to lock in their gain. But it's just something to start being aware of when you're seeing a lot more of these coming into market, because it explains some of the activity that happens out there in the equities. So the same way that we got used to things like the pricing periods of convertible bonds, and all of a sudden that became an edge because people, even after a long time of these happening, still didn't understand that during those pricing periods, there was a huge amount of shorting that was going on. And so those prices were getting driven down. So you could make short-term trades around the pricing periods that could be pretty profitable for you. Now you're going to get some of the same things with mergers. And every merger is going to be different. So they're all going to have different structures. They're going to have different lockup periods. They're going to have different merger prices. They're going to have all kinds of different nuance to them. So the intent when I threw that out there was not to, get people to start panicking about mergers or speculate on my investments, because I'm not trading anything around any of these mergers. So, I'm not in this market, but it's just something to be aware of, because now we've got a new category of investor that's coming in, and there's a lot of capital that's looking to get into these pipe deals, because you're getting pricing effectively before they become public and they get that premium on them. So there's a huge amount of capital and demand there. You saw it with the Trump announcement and all the money that they raised. And, now you're seeing a lot of these follow-on investments happening, and the size of the capital is just huge. So with big capital comes big arbitrage opportunities. And it's just something to start watching. This retail community is going to have to get smart around these, start watching the movements, try to figure out what's happening, watch the short interest as it's opening up. And these are going to be one of the tools you can use to explain what's going on. And after we see a few of these, we might start to see some patterns that become actionable as investments. So that was the intent to me, throwing that grenade over the wall and then going to sleep, and then saying that Dan and Jeff would figure it out later.
Yeah.
That was all I was doing, was trying to just make people aware that this is a thing. Merger arbitrage is very big. It was kind of dead for a while because there wasn't a lot of mergers happening like this. But all of a sudden now, with all these reverse mergers happening, it's going to be back, and it's going to be back in a big way. So it's just a new concept for investors to get smart about.
There's a lot of speculation and premium that's slammed into these tiny nano market cap companies right away. And that's the ARB, right? The ARB is this unknown element of what is the company worth. And that's what everybody's trying to figure out. That's what the speculation is trying to figure out. And that's what, some of the investors are interested in, right? Like they're interested in what the valuation is in the marketplace and getting a liquidity on initial investment. I mean, these documents are very long, right? Go look at some of the SEC. They're all SEC filings. You can go look at all of them. They're incredibly complicated, incredibly in depth. There's a reason I haven't spent a ton of time on them, is because they are very, very complicated. There's a lot of kind of froth that I think happens around them. And I prefer to let something start to trade in the market a little bit more. Once the deal closes, once there's more transparency on Bitcoin held, things like that, in order to, have an understanding of the valuation of the company. Like for me, I love strategy because of the transparency and understanding what a valuation metric may be, based on, the Bitcoin that they hold, the debt that they hold on the balance sheet, and the math that sits behind it. So by far and away, my absolute largest position in my entire portfolio. Cool. That's kind of all I had on the agenda here. Should we talk moon math? I updated my original spreadsheet on MNAVs for MSTR. Might be something good to end on. People have asked for it a lot. Should we hit it?
Oh, yeah. As long as you don't list any MNAVs below 3.
I have we can go through it. I have MNAV up to 40, just in case anybody wants that, with Bitcoin price up to $1 million. So just, throwing out some moon math in case the market just decides to reprice.
That's kind of bearish, Jeff.
Yeah,
MNAV 40. I mean, if
MNAV 40, Bitcoin $1 million.
Yeah, MNAV 40, Bitcoin $1 million, MSTR trading at $81,000. Yeah, that would be pretty crazy. But hey, anything's possible. You look at how frothy some of the Mag 7 valuations are. The PE multiples. You look at their multiple of book value, and you start to reflect on the comparison of the two, right? Like in my opinion, and I've tweeted about this, is like digital capital is the final frontier. Right? Like all of the Mag 7 companies, where do they store their value? Right? All the earnings that they have every year, where does it go? Like, what do they do with it? And the answer is they do stock buybacks, or they invest in R&D, or they hold it in cash for a future point in time, or they dividend it out. And now you have another option. You can buy Bitcoin with it. And if the market starts to shift to like how do you value this company? Well, it's a function of how much Bitcoin you have and how much Bitcoin you can continue to have into the future. And if all of these AI companies that are at the top of the publicly traded leaderboard start, using Bitcoin as their store of value, then that just makes everything kind of grow, and that puts strategy into this new stratosphere of potential valuation. So I think anything can happen. And I still think, I do think the rest of the equity market is probably mispriced. And I do think that strategy is also undervalued and underpriced. So is the MNAV of 40 possible? I think there's a probability. There's a probabilistic scenario greater than 0 that it could happen. So that's why I put it out here. But even just looking at, some people talking about 150,000 to 250,000 Bitcoin price in 2025, or I think Tom Lee threw out well above 200,000 in 2025 on CNBC the other day. So let's just say 250,000 based on 580,000 Bitcoin held, $10.1 billion in liabilities, about $51 billion in net assets, trading on a multiple of net assets of around 2.07. The peak in 2021, the MNAV in 2021, when MSTR was included in the S&P 600 at that point in time, was around a 6x MNAV. So $250,000 Bitcoin price around a 6x MNAV, you're looking at something around 2,900 per share for MSTR. And that, it doesn't contemplate the additional torque of any of these instruments, right? And where that would come into play is this publicly available float wouldn't increase very much, right? The MSTR publicly available float may stay relatively static and may not grow very much, but the amount of Bitcoin held on balance sheet may grow drastically. That's the whole point of this Bitcoin torque, is you're getting more Bitcoin in the door for less shares that are trading out in the market. So you gotta love some moon math. We'll see where it goes. I mean, $500,000 Bitcoin price, you see these numbers get pretty nutty pretty quickly. And, we haven't seen mania yet, right? You look at any Google search trends, you look at Bitcoin, you look at MSTR, we're still very quiet. IV on MSTR is still incredibly low. The possibility of S&P 500 inclusion is decently high with the price of Bitcoin at $105,000. Here's my earnings estimate that I put through a little bit earlier. I think we talked about this 2 weeks ago. With a Bitcoin price today at $105,000, you're still looking at a $12.3 billion gain before taxes in Q2. That would clear the hurdle by $7 billion of having positive net earnings over the last 4 quarters combined. And even if the price of Bitcoin goes down to $96,000, MSTR still has positive earnings over the last 4 quarters of $1.7 billion. So we've got a lot of clearance there. I think there's still some, we've got 26 days left until the end of the quarter, and we'll have more certainty on what that looks like. But, if the price of Bitcoin continues to rise into the end of Q2, this could be a very, very positive result, thinking about speculation for S&P 500 inclusion and what's on the horizon. So I continue to be very bullish. I continue to be bullish on these new instruments that are hitting the market, right? Strategy's going to IPO STRD. STRD will generate, they're seeking $250 million in the IPO. I suspect they'll probably get anywhere from $250 million to $500 million on this product. And that will probably be announced in the next week or so. And we've got also ATM happening throughout the week, the triple threat, quadruple threat on the horizon. So I'm bulled up. I'm excited here. Any else final thoughts? Maybe we'll pass it around over to
I saw someone post a ticker that was STRS and it stood for stress. And I think it needs to be like the ultimate junk bond, where live at the end of every quarter they come on and they spin a wheel with 10 slots, but only 3 of them have a yield in it and the rest are 0. And so the highest yield is like 20%.
Oh my God,
and
you could
so
get a
come
yield
on
you may
live
not
stream
get
on X, that we can invite them on the show if they want to come on the show and do this. And people
It's-
have to
it's
sit
like
there
the-
and be
it's-
stressed that they might get 0 yield on this all year, but they might hit it big one quarter. So
It's like the 1080s of preferreds.
The
it's
1080.
the preferred.
Oh, yeah.
Yes, exactly. We'd all hold them, just waiting. We'd try.
Yeah.
The 1080s of perverts. Your dividend is a 1080. Your dividend is one 1080 call.
Is the call option?
You dividend out the deepest
I
out of
can't
the
wait
money
till-
call option for 1 month out that you can get your hands on. I like it.
I can't wait till the day when the 1080s are no longer a
Yeah,
joke,
when
and
they're-
they're just in the money.
Well,
when it's conservative, like
Yeah, for sure.
Yeah, exactly. It's like, I'm just buying 1080s. It's.
Well, I mean, 1080s will exist again after a stock split.
No, it's not.
Instead of
Yeah, my
10,000.
ticker was
it's true.
my next
the-
ticker was STRV. It's starve. You get a 1% dividend, so you can eat ramen noodles, and then you get a 1080 expiring this Friday.
Every
One
week.
one each week.
They got to go buy that ticker from Matt Cole if they want it. So,
Yeah.
That's true.
It's available.
people are probably out reserving all the STR tickers they can get their hands on right now because it doesn't cost you anything to reserve a ticker. So,
I just pumped STRV. It's going to open up.
Companies are locking
Really?
those babies up right now.
Yeah.
If
it's gonna
Sailor
gap up
didn't
and
already
running.
lock them all up, my hunch is he went and did that for himself right away.
Well, he's already used 11% of the letters after SDR. So, you only got so many.
Yep.
It was funny. I posted today. It's like, I think MSTR, I think they will announce a 1 or a 10 sat dividend perpetual preferred. And Dylan responded, well, that's MSTR. It's just tax advantaged and you get the Bitcoin per share. And I was like, oh shit.
And it automatically reinvests the dividend for you. Yeah.
Yeah.
I've been saying this.
it's a drip.
MSTR is just it's just a Bitcoin dividend. That's how you have to view it.
It's a Bitcoin drip. And in a
Tax advantage.
tax
Yeah.
advantage Bitcoin drip. Yeah, it was perfect. I was like, oh, that's a fair response. And he's like, he's got the sniper, sniping me from behind. It was amazing. Anyway, Dan, final thoughts?
This is really exciting. All this stuff's super exciting. It gives us something to look into, and I think it reinvigorates our interest in the equity. So yeah, it's awesome.
Did you ever think you'd be a bond man, like a bond
Oh,
trader?
didn't I think that? Yeah, it's so interesting. Like, no wonder all the sharpest people are in bonds. This stuff's fascinating. I think.
Oh, yeah. The world's changing around.
Dan went from 1080s deep out of the money to fixed income maxi. Yeah.
Yeah, now I'm levering up on preferred stocks. I'm like, this is great. It goes up 1% every day. Best thing ever.
All right, guys, forget full gamma. What you really need is a fixed dividend payment every month that you can rely
Have you ever
on.
thought about just getting 8% every year?
Dan and I were actually we did a model this week of like levering up on Strike, and it's a pretty cool opportunity. Maybe we'll share that next episode. We kind of like as we were doing it, Stride came out, so we're like, oh, forget this. we need like literally as we were doing it, we're like, oh, god damn it, we have so much to learn. Let's go learn about junk bonds for the next day and a half. So.
If you haven't watched the Stride presentation, go watch it. Right? What is it? 50 minutes. Watch it.
Oh, yeah.
Watch it on 1.5 speed. Spend the time. Do it. Right? If you're here listening to this 2-hour thing and you haven't listened to the SDRD presentation, go do it. It's fascinating stuff. Listen to the credit ratings. Listen to how they're thinking about it. Totally illuminating stuff. Soleil, final thoughts.
Yeah, I'm going to double down on that. Go listen to it. And shout out to Tim, because I think he scooped it back when he interviewed Fong Li. And he straight up asked him, would you guys consider, buying the stock back? And he's like, yeah, we'd have to think about it and look at if it made sense. And, he was just holding his cards. Like, they had to have been developing this all along. And to me, it was just the checkmate move. I was so psyched once I finally understood what it meant. For the bear market, because I think we never got to that, like the, whether the cycle happens or not. And it's the most bullish thing that I can imagine if Bitcoin, continues the 4-year cycle, but Strategy has this lever that they can pull. I couldn't be more bullish right now.
Bingo.
Yeah, I'll hop in there. Yeah, premium agnostic, perpetual Bitcoin yield. Like, wrap your head around that. That's what I've been wrestling with. Other than that, I think right now it feels really quiet. And if you're here, like if you got in during November and you're still here and you're still watching, you're still paying attention, good for you, because this market's just it's designed to shake people out, and only the concentrated and dedicated survive. So I think we're having a lot of fun. I'm learning so much every day. New products come out, and it, you know, expands a whole world of finance that I'd never even considered to look into. So I'm having fun, and I think this summer and the rest of the year is going to be, there's going to be some fireworks, and if not, we just know that the fireworks are coming. We just don't
It's
know
on the
when.
horizon.
So, yeah.
There's so much trash fixed income out there that
Yeah.
it just needs to be repriced or come into Bitcoin and these alternative products, right? Completely agree. It's so funny you say that. Like, if you've been here since November, you know, good for you. I was messaging with Gladiator today, and he said it's only a matter of time until it erupts, but it could end up testing our patience. And it was so funny. It's like, dude, I've been in this trade since 2023, like late 2022. I even bought it in 2020 and 2021. It's tested my patience the entire way, right? Like I sat in one options trade with 100% of my portfolio for a fucking year and a half. It's like, yeah, I could wait a few months to see how this stuff plays out and how this evolves, right? Like this is the most exciting time to be in this trade. And I think it's going higher. Yeah, there's a lot of.
What's he working on? Because he left MSTR, then he went to GameStop.
I don't know.
So you know,
he's back. He's back.
Is he back?
He's pulled up.
He's
pulled
pulled
up.
up now. Okay, good.
You know who else is back?
He's max
Ryan.
margined on preferred equities, like Dan.
Yeah.
Yeah, he's
I'm gonna
maxing
say-
out on preferred equities. Yes.
I want to say shout out to Ryan, because Ryan was at the conference. He's been more active online. He just did a thing with Anders and Brian, and just shout out to Ryan. It's good to see him back, and it's good to, you know, hear his voice and have his analysis. And we all love Ryan, and I know he's asked for a lot, and he's back. He's back. So
He's back.
It's good.
Good to see him out there in Vegas, man.
He's in the zone.
Yeah.
He
He's in
came.
the
He
zone.
came to the True North meetup event. Yeah, it was great.
It was awesome.
Ben, final thoughts?
No, because if I do, I'll go on another rant, and none of us will ever get to sleep. And I'm probably the one that needs to get to sleep here. So I'm good, man. I'm bowled up.
Bowled up.
Good to go.
All right.
Bowled
I
up.
think we're
Ben's
all bowled up.
bullish. Let's go.
Yeah, there we go. All right. Appreciate everybody for the time, and great to see everybody out in Vegas. Thanks for hanging out and listening to Stride. We'll have more content coming out on the horizon. I think we'll be back next week, and a lot of things to be excited about. So let's go higher.
Thanks, guys.
All right. Cheers. See ya.